The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Welcome back, folks. We kick things off on Monday morning. We got about 24 minutes to go until the start of trading, and you have markets deep in the red. S&Ps, NASDAQ, Dow, all dramatically in negative territory right now, giving back most of the gains that we had on Friday afternoon. The headline out there: President Trump does not rule out a recession. He's been in office less than 2 months. Finally, a little reality, though. All right, I've been saying, you want to make a long-term change, it's going to take a little short-term pain, and maybe that's what we're about to see. But boy, stock prices maybe going to take a little bit of a hit as you have the president not ruling out a recession. There's a bunch of verbiage that we're going to go over this morning, but nonetheless, markets reacting. We got the S&Ps down by 336 points, or 1.7%. That's the NASDAQ 100. Off 1.7% right now, 19,892, and you can see we're only about 100 points from where we were on the low, and that is a remarkable feat when you think about that. We closed almost at the tick high. There's 355. You were at 19,286. The NASDAQ 100 accelerated more than 2.5% from the middle of the day on Friday, and we're going to give it back by the time we open on Monday. You want some volatility in a two-way market, all right? As I've been saying, pressure is to the downside here, quality volume to the downside in this market, but we do have a two-way market, and Friday's bounce illustrates that. Okay, you're trading this market, no reason to hold on to a short when the market pops 2.5% on the way up. Same thing, all right? You're trading this market on the way up, no reason to hold this thing for 2.5% on the way down in the same way. But yeah, you're talking about, what is it? 20,286. 20,286 off of 19,765. 521 points, which is 2.64%, was the acceleration from low to high, and just like that, we might give it back. We got 22 minutes, and we might give it back by the open. S&Ps, pretty similar chart. You accelerate from 56.73 up to a high of what? About 57.90. You're talking about 115 points again, more than more than a 2% acceleration, and we're almost going to give it back by the open. S&P's off by 1.4%, or 81 points. Dow off by 1.1%, or 481 points, and the Russell off by 1.2. Crude, a little bit of a drop in the last few minutes. Zooming back in on crude. There you see that drop just in the last few minutes. We're trading at 67.18 right now. A little volume coming into crude on the downside right now. You have gold basically flat, but this is the story. Notes and bonds. Higher price, lower yield. Coming at you. Just like that. When's the Fed going to cut? The market says maybe June already. We're at 4.25% right now. 4.25. On that 10-year, you take a look at a little bit longer term, bumping up against a little bit of resistance here. That area in the 10-year, right where we were back in December, with a high of 111.20, and we're at 111.02. But again, 4.25 right now in the 10-year. Dollar, one of the biggest stories last week, all right? And yeah, it's not going to stop. Now, that's the action we had as of Friday, and here's the action today, right? Lower price, man. Look at these 5 bars. From 107.50 to 103.73, and we're challenging the lows. You put it back to a 15-minute, just chopping around at Friday's low. Weaker dollar, right? Weaker yields, weaker economy. It's a tough one, folks. That's what's going on right now, all right? We have yields going down, you have the markets going down, and you have our currency weakening. I'm hopeful for the best, but what's intimidating here is, all right, you get headlines like this, all right? This is the front page of the Journal. Stock futures fall as Trump declines to rule out recession. And yeah, saw the headlines out there, of course. President Trump over the weekend, Fox News, There's going to be a period of transition, but because what we're doing is very big, very bigly. There's going to be no recession in America. Listen, I wouldn't believe a single word the Commerce Secretary Lutnick says, okay? The president's one man, all right? And I don't believe much of what he says either, but he's an elected man that won by a landslide, all right? Lutnick, I don't believe a single word that guy's talking about. He's just out there. He might as well be a PR piece for the president, okay? Yeah. And I wouldn't be surprised, right? You don't want junk. And he's out there saying there's not going to be a recession. Even Trump is out there saying there's going to be a period of transition. That is dicey stuff from a man that lives and dies over how the market does, right? Yeah. And yeah, they got the video of it all. Fox News, of course, so there's going to be videos. But yeah. Strong words, man. When you think about the president living and dying by the market, and he's talking about a transition period, it doesn't sound like those tariffs are going anywhere anytime soon. And the toughest part about all this, folks, okay, is if you want these tariffs to make the change that many in this administration, the president including, wanted to make, right? You want to incentivize investments in the U.S. to make products here versus incentivizing to make products elsewhere, right? You're going to make products that are made elsewhere more expensive by taxing them. Therefore, companies will be incentivized to invest in America, build in America to avoid tariffs. Folks, do you know how long it takes to build a plant? 2, 3, 4 years. Easy. Done. 2, 3, 4 years. Okay? Now, there's going to be a month reprieve. How do you make capital investments in that type of environment, right? It's something you want to think about, big picture, okay? Because as I'm jumping around this morning, trying to find the right headline here. That's not it. Yeah, here was the headline that caught me. Trump rejects pleas from businesses for more clarity on tariffs. They always say that, all right? Just use your brain here, folks, all right? There's a tariff war going on, and companies are having a very difficult time trying to figure out one way or the other. It's one thing if tariffs are on. It's one thing if they're off. It's one thing if you don't know where they go. All right? The market hates uncertainty. There's more uncertainty right now than we've had for a lot of time. They always say that. We want clarity. All right? They have plenty of clarity. I mean, it's just hogwash. All right? It's unfortunate that somehow I'm going to be taken as political. All right? They have plenty of clarity. They don't have any clarity, folks. All right? Clue this into what's happening in the market right now. All right? They don't have any clarity, period. That's it. There's no clarity, all right? Yeah. Pressed by Bartiramo, whether there be clarity for the business community, I think so. But, the tariffs could go up as time goes by, and they may go up. And, I don't know if it's predictably. That's not clarity. And there's no clarity whatsoever, okay? And the bummer of it is if you really want the tariffs to have the impact you want them to have that you're talking about, then you need some clarity, right? You need clarity. If they're staying, you need some clarity. At least there'd be clarity. They can make the changes. He's got some time right now. He's got almost 4 years. You start getting into a year or two from now, you get into another election. That's a more difficult endeavor. It adds more uncertainty to the equation, right? Market digesting a lot this morning, folks. Keep those spikes up. We're going to have some big moves in both directions. S&P's off by 76, NASDAQ 100 off by 320. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got markets in the red. S&P's off by 76. NASDAQ 100 off by 320 right now. Is that Novo Nordisk? I think it's going to be. Yeah, it might be. So these weight loss drugs, man, you talk about it. So I can't pronounce this. Cagrasima, maybe? And you're talking about 15% weight loss in 68 weeks. So what is that, 16? About a year and a quarter. But yeah, how about they were looking for 25%? Huge miss when you think about it. And that, in another late trial report published in December, they found that that same drug helped patients reduce their weight by 22.7%. These weight loss drugs, man. Markets had been hoping that this could become the next generation weight loss drug. The treatment, injected once weekly, is a combination of the active of, let's see, this one and semaglutide, which is the active ingredient in Wegovy. 1,200 patients and a mean baseline of body weight of 225. Now, it's going to vary greatly for height and for sex in terms of male and female. But it is still pretty remarkable when you talk about that weight loss drugs are failing when they're losing almost 16% of your weight. Folks, 16% of your weight would bring you down from 225 down to what, 187? It's a mammoth of a difference in terms of quality of life and health across the board. Now, you know, if you're a 5'1" female at 187, it's a different story from being a 6 foot tall male. Okay, but it's a remarkable amount of weight that all these drugs are losing, but this points to the expectations. That's the long-winded way of saying remarkable remarkable, okay, expectations for these weight loss drugs when you think about it. So what do you got? Lilly jumping higher on the fact that their competition's struggling? Well, briefly, but they give it up with the market. Can't trade higher today, even on that news for Eli Lilly. And they've had some volatility as well. Yeah, look at these volatilities. Pushing highs, you pull back a bit. Eli Lilly trading at about 860 this morning. Yeah, this story, EKS, posted in the den. I had it ready. Rocket companies buying Redfin for $1.75 billion. All stock deal, $12.50 a share, about 115% premium to Redfin's closing. RDFN is their symbol. Let's check out Redfin. They're on the fly this morning. And it is remarkable. Look at this. They say they're getting it at what? 115% premium to Redfin's Friday close. They're getting it at $12.50. It's only trading at $10 right now. Okay. The deal again is for $12.50. It's only getting $10. So the market's saying we're not sure this is going to go through just yet. Okay. And what's remarkable is that they're getting it at $12.50. Well, you were just trading at $12.50 in September. Yes, it's 115% premium, but boy, it's been quite a slide over the last 3 or 4 months for this equity, Redfin in particular, okay? Redfin was 2004. And yeah, they host they got a real estate brokerage, 2,200 agents out there. Now, $200 million in run rate synergies by 2027 is what they're talking about there. Now, the kicker is, let's go to Rocket now. All right, now I have my mortgage with Rocket. Okay, this thing, a little bit of acceleration. I remember when this thing was going public, folks. Everybody in the whole planet had refinanced, right? Because look where we were. They went public in August of 2020. The rates had dropped dramatically. The market had already started hugely accelerating to recalibrate to where we were in August, right? Remember, we were above the pre-COVID highs. Market had resurged. Okay, we go back to yields to figure out where we were in August of 2020. Everybody started refinancing in March when rates went to zero. Over the next 5 or 6 months, they did more business than they had ever done before. And they said to the market, you know what? We're going to put it out to the public right now. And look what it did. I mean, I remember paying attention. What a short, right? You come in at about $15. I don't know what they IPO'd at, but a little volatility in the beginning. Somehow you get a spike on March 2021. Seems real with the volume there. Is that real? That's a monthly. Is that real? Yeah, it might be real. Look at that volume bar we got in March of 2021. Well, look at that. We're trading under it, and we have been. And you go from $20 down to $6. Just remember, folks, there was no reason for this company to go public at that time. Okay? The only reason to go public at that time was that they felt their shares were overvalued. If the company going public is an established company that's just going to take that money out, be very careful. Okay? And this is a perfect example of that. There was no reason for them to go public except for the fact that they said, you know what? The numbers we're doing right now, we're going to get the valuation right where we are. We're going to sell into the public. And here we are, what? Almost 5 years later at lower prices than we were. And that's a 5 years, folks, in the market, okay, where we've gone from 3,500 to 5,500, and you're in a losing position in Rocket. So be careful when people are pushing money out to the public. It's one thing when you're pushing money out to the public and you're a growth company, you have no revenue. There's risks that are inherent in that, obviously. But when you have a well-established company like Rocket, and I remember saying, who is going to refinance for the next 5 or 10 years when they were going public? Writing was already on the wall. Everybody in the whole country had refinanced because we were at 0% for about 5 months. The market was on fire. Why would you not, right? Yeah, and here we are. But nonetheless, they're spending cash. And here's the last part of it, right, is that they're using all stock, okay? And here's something that I always remember. If you really love a company in general, and you're a strong company yourself, you pay cash, okay? When deals get done, remember this. If you love everything a company has to offer, you want all of the upside that they have, and you don't give them a piece of the action, right? If you see an opportunity and you know that opportunity is gangbuster, right? You don't say, hey, let's partner up, right? You say, I want to buy your company, okay? When companies say, hey, it's an all-stock deal, I want to partner up, it adds a little bit of a level of spikes on my back, and it should for you too, okay? Because if they knew that this deal was going to be a no-brainer, they wouldn't want to give away stock in a company that's about to be poised to break out with that acquisition. They do it in cash. But no, they're making them a deal, and it's not as strong as it might be. And ever since they pushed that out to the public, I'd be very skeptical of what's going on there, okay, with Rocket, because they got some time to go in terms of, hey, we'll see. Always interesting to think about as the economy is weakening right now. Are we going to get some potential rate cuts? And if we get those rate cuts, where's the economy going to be? Are mortgages going to be affordable? But is the economy going to be healthy enough to have people taking on those mortgages? All right, we're coming back for the opening bell. Markets in the red. Don't go away.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So much for Friday's reprieve. Things said, and this is what a market does, folks, It's not a one-way trip, okay? Especially with the type of uncertainty we have right now. You see the type of moves we've had. So I've been saying it's a two-way market, okay? Because there is a level of uncertainty we haven't seen in some time right now. The market can't figure it out. Every time we get a dip, we got dip buyers in here, okay? Friday, a little bit of optimism, and you talk about misplaced optimism. You come into the weekend, and we're down by 1.8% on growth stocks right now. S&P's off by 1.3%. We jump around to some of the big dogs. Apple shares, they got a pop on Friday, but they give it all back. Down by 1.7%. Amazon, down by more than 2%. They get back the acceleration they had on Friday. Microsoft shares below Friday's low. Check that out, down by 2.5% right now. Tesla, down by another 4%, testing Friday's lows as well. Meta shares right now, down by 3.2%. You jump over to NVIDIA, 2.3%. I mean, all the big dogs are actually down more than the NASDAQ almost, right? NVIDIA, Amazon, Microsoft, Meta. What's Google doing this morning? Google, down by 3.5%. It's not stopping, man. Watch out in this market, folks. AMD shares off 1.7%. Intel shares off 1.3%. Let's jump around to some of the banks this morning. Yeah, it's a continued slide, man. The economy is going to have problems. The businesses that manage the money in an economy are going to have a pullback, and you're seeing a company like JP Morgan down 20% from where we were February 20th. All right, and it's not quite. What are we down? $43 right now. You'd have to be down 56, so not quite 20. What are we pushing? Maybe close to 16%. But pay attention to the banks, man. They were stratospheric on the run higher. And the run, 223. Yeah, which would be about a 20% pullback. So $56 off the top will pull you back. That would be 224, and 223.40 brings you back to about a 382. Banks are coming back. There's your level on JP Morgan, $13 lower. Look at this market, man. NASDAQ off 400 now. Yeah, it's not stopping, folks. NASDAQ off 2% before you can even blink on the opening bell. Man. We jump around to Bank of America shares, down by 2.8% right now. Wells Fargo shares, down by 2.5% right now. Man, and Citi, off by 2.8%. I was reading this story talking about the banks and the CFPB. Okay, now, I think there's a lot of good the CFPB does. Okay, folks, I'm dealing with financial transactions myself. I'm dealing with banks myself. Okay, and then it goes much deeper, though, because these banks are the ones, as in the big banks, are the ones that are actually policed by the CFPB, okay? And what now they're worried about is that if that goes away, banks are going to find themselves competing with non-financial bank players, including tech firms, with less scrutiny than the FDIC-backed banks. And what brought me the most here, and folks, banks need regulations, okay? Banks need regulations, period. They're the underpinning of the entire economy. We see what can happen since 2008, okay? But look at this one. This is shares of newly created checking accounts by bank type. Now, what I don't like here, okay, is that share of newly created checking accounts. Tell me how many funds are going into these accounts. Don't tell me how many people created a cheap account that put, a free account and you put $100 in there. But in yellow here is fintech. These are digital banks. That's where the accounts are getting created. All right, credit unions at about 5%. Community banks, which is under $100 billion, is at 4%. Regional banks, always a big number, and mega banks, kind of the same. So between regional banks and mega banks, less than half the accounts being created. Look at 2022. Look at 2023. Look at the yellow. Fintech, a big player. So again, you're going to see regulations, right? They don't want regulations, but guess what? They want regulations, right? They want regulations for their competitors, for sure. Yeah. And you better believe it. You're talking about what? You're talking about PayPal, Stripe, Cash App, all that stuff. And they would basically get a free ride at the federal level. The CFPB, I have to chuckle. It's nonsense, folks, okay? I'm allowed to call it nonsense. It's not political. It's absolute nonsense that somehow the CFPB, the only federal agency that supervises non-depository institutions, would go away. Yeah. Like PayPal, Stripe, Cash App, all of those businesses. They're the only federal agency, okay, that supervises, quote unquote, non-depository institutions. So that would go away. Doesn't seem like a recipe for great things in the future, okay? So pay attention to that one on the banks. Yeah. We talked about Novo Nordisk. Yeah, we talked about treasuries. Yeah, and you're talking about credit risks, man. There's nothing bigger, folks, than the dollar going on. Let's check in on the dollar, because we got, weaker yields, talking about a weaker economy. We got a weaker dollar because we're weaker on the global stage. Europe's going to be spending more money. They're going to be spending defense money. You're going to have Europe now grading nuclear armament, okay? I think about the world 30 to 40 years in the future, folks. All right, the last thing I want is Europe having another nuclear arms race because the U.S. steps out from the, yeah, and I would pay attention to the dollar because I don't remember the campaign spiel going weaker dollar, weaker yields, sinking market, but we got a big plan, okay? And it stinks that you get it political, okay? But pay attention to where we are going right now, okay? Because the market is flashing you signs right now, no matter where you are on the political realm, okay, that we got markets crashing, we have the dollar crashing, we have yields crashing. And the tough part about this is normally we would say, well, the Fed's going to come to the rescue, and they have a lot of ammunition. They do have a lot of ammunition, right? The ECB, Lagarde, she was talking last week. She was out there. They brought their rate down to 2.5%. We got 2 full percentage points above there. Doesn't matter what the Fed does, folks. Okay, if businesses have zero idea of what the competitive landscape is going to look like internationally for years to come, very difficult to overcome that type of uncertainty when you deal. I mean, these public companies, it is remarkable the type of budgeting, planning, right? I mean, the way that they can nail earnings, revenue, forecasting, right? The forecasting that many of these companies do is remarkable. How are you doing that right now? Okay, so pay attention to these markets, man. I think this is just the beginning. And it is just the beginning if you have the president out there preparing the nation for whatever verbiage he used. Okay? Yeah. We're not even down 10% in the S&Ps, and you go big picture, and you can barely see a pullback in this market from a straight trip higher with 2 pullbacks in the market. COVID and the rate rise of 2022. NASDAQ 100, even more pronounced. We were talking about how February had barely had a red bar. Look at that. A to B, C to D, we completed at 20,623. And what's remarkable here is, check this out, right? We completed that A to B, C to D in July. July. It took 8 months for the market to roll over, right? Sometimes, folks. So, and I'm not saying we're going to zero, but there's nothing outlandish to bring us back to, the highs of 2021. All right. That was a 10,000 run from the COVID lows. You came into COVID at about 9,000 in the NASDAQ 100. Would it be that outlandish if we pull back to 17,000? No, it wouldn't. We got fear all over the place in this market, folks. All right, stay tuned. We're coming back. S&P's off by 80. NASDAQ 100 off by 385. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. TFNN.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
It's chopping around right now in negative territory, kind of right where we kicked off the session. S&P's a little bit of a bid. We're down by 73 points, but you do see we just got a bid of about 25 points from the low. You were pushing 105 in the red. We're at 56.80. We're trading at 57.04. NASDAQ 100. And as I mentioned, folks, you're trading this market. Keep those fingers quick, okay? You got a short going on? If you're thinking big picture in this market, maybe you keep it on. But shorter term, look at the moves and the accelerations across the board, right? You challenge that critical area of 19,800. We're bouncing a bit. We'll see if we can carry that bounce throughout the day. Dow, a little bit of a bid. Down by 297. But the Dow, what we just bounced? 200 points? Yeah, 200 points on the open. From 42,326, and we're at 42,548 coming into the highs of about 545 this morning. You jump over the VIX, we make a new recent high of 26.74. You put this thing on a daily, and yeah, that's a pretty decent pop. Talking about 26.24, and you can see some of the recent spikes, usually around the 23 to 24 level. But this time might be different, folks. It's an ominous phrase, but this time is different than September, October, November, December, and January. Even myself, all right? You got President Trump, the man that loves stock prices more than anything, even though they're not indicative of the economy sometimes, basically preparing, all right, with a little bit of marketing as to why it's okay if the stock prices go down. You better be paying attention. Where's my Dow 43,000 hat? No, those days are gone. Yeah. All right, let's check out some retailers. Look at Walmart, man, down by 2.9%. The fears are on, folks. 89.09 for Walmart shares, down by 2.9% right now. You jump over to Target shares, down about 0.2% right now. TJX flat right now, 119.30. Kohl's a little bit of a bid last week. You're at 12.24 right now, basically up by 0.25%. Home Depot up by 1% right now. We jump over to Lowe's, up by 1.2% right now. All right, let's jump over that gold contract. Gold's been holding up so well. 29.08 with what the dollar's done, where gold is right now. Highs at 29.74, trading at 29.07. And I think gold, a little bit of consolidation here, right near the 3,000 mark before you make that acceleration through. It's going to take a little bit of consolidation. You're going to have a little work to do to make it through that 3,000 price point. But I think we're heading to about 33.50 in this market. And that would be a 1-to-1 A to B, C to D from the move that began last February. You trade up about $800 from 2,000 to 2,800. You pull back, and if we do that same move again, brings us to about 3,350. How about that for a weekly bar? Right? Look at that bar, man. You're competing with some of the areas where we had huge Fed shifts going on. Haven't seen a bar like that in some time. Pay attention to it, man. We give back everything to do with the election. Markets, yields, the dollar, everything. You talk about it, man. All right, let's jump around to what else we got going on. I like this article over here from the Journal because I love avocados, folks. They're super healthy fats. They have great fiber in there. And look at this number, though, right? So what's interesting here is how many avocados do we eat per capita? Availability of avocados. All right, this is not how many we eat. 10 pounds per person. I don't even know, how do you compute this? So there's 9 pounds of avocados available per a person? Maybe? Yeah. I don't think you're eating that many. Maybe that's just how many are available. But nonetheless, you know why? Mexican imports. Don't show that to Trump, man. Don't show that to Trump. I don't want to be eating U.S. avocados. I like my Mexican avocados. They're delicious. They're healthy. Nonetheless, all right? Yeah. And myself included. Only in the last 10, 15 years, it's remarkable. I remember trying to figure out how to cut an avocado open and when it was ripe. And now I eat them all the time. I love my guap. They're so healthy, folks. They have a bunch of healthy fats. They actually have a bunch of healthy fiber in there as well. And, of course, tons of good nutrients. Yeah, Haas avocado. The source, 80% coming from Mexico right now. In the 90s, yeah. No, that's it. Are you serious? I mean, why don't they use better verbiage then? Because I was reading this earlier, and I was like, what's going on? Per capita availability. This is saying how many they consume right up here. Are you kidding me? 9 pounds? I love avocados. Do I eat 9 pounds? I might. You know what? I might, because I eat a lot of guac. You know, I didn't want to tell a Sam's story, Darth. I didn't want to. Where do I get my guac? I get it from Sam's, folks. They got some great single-serving guac. It lasts for about a month. Okay, yeah, it's a little bit processed. Regular avocados are great. You know what the problem with regular avocados is? You got to figure out when they're ripe. And not when you got to figure it out. It's like you got to get them. You got to put them in that paper bag to get them perfectly ripe. And then you got to eat them the day they're ripe or they're overripe. Now, here's the kicker. If you are eating them, right, when they get ripe, throw them in the fridge. It kind of stops that ripening phase, and it keeps them there for 4 or 5 days, sometimes even up to a week, potentially. But yeah, 9 pounds of avocados a year is what Americans eat. That is surprising. Sounds like a lot. It is. In the 70s, it was less than a pound. In the 90s, it was 2 pounds. I mean, imagine that, right? Whew. But yeah, American, you know, it goes with the health kick, folks. Okay? A lot of our diets have changed. Doesn't mean I still don't snack, but we're more aware of healthy fats. We're more aware of carbs. We're more aware of everything. Yeah, and even Tom Brady, he's got his avocado ice cream. I haven't tried that, but I bet I'd probably like it. I can make some avocado smoothies sometimes. Very, very delicious. Hey, look at that grapefruit taking it on the chin, man. Apples, fruits are the best, folks. Tommy eats a tremendous amount of fruits. Veggies are a little difficult. We're still working on veggies. But fruits, berries are the best. Strawberries, raspberries, blackberries. Almonds are great. Almonds have a lot of fat in them, so be careful. I love snacking on almonds. The problem is I snack on too many almonds. Bananas. You know what I always say? Tommy eats usually a banana a day. Bananas, folks, I always joke. If I was ever poor and was struggling to find food to eat, bananas are like the cheapest thing in the world right now. I don't understand how they're so cheap, they're so delicious, they're so healthy. Obviously, they're pretty easy to produce. You're talking about getting 3 pounds of bananas for like $1.50 at Sam's. Talking about 7 to 8 bananas. So a banana costs you less than a quarter this day and age. Imagine that. Nobody talks about that enough. I know I harp on it, but bananas are so healthy. Everyone's going crazy about prices. Go eat some bananas, folks. Have a banana, have a little yogurt, all right? Have a little juice. Bananas, so healthy. Yeah, but nonetheless, Congress established a federal program in the early 2000s. We collect a few pennies for every pound of fresh avocado sold in the U.S., and I'm sure that's adding up. Nonetheless, avocados on the rise. How about that one, man? 9 pounds a year. Not bad. Stay tuned, folks. One more segment. We're coming back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Just like that, markets below Friday's low. NASDAQ 100, how about 482 points in the red, or 2.4%? S&P's off by 92, or 1.6%, just right coming into Friday's low. And Dow, the strongest out there. A little bit of a bid from the Dow, up by 7, excuse me, I keep saying, down by 0.8%, but you can see the Dow's a solid 300 points off of where we were on Friday's low. Growth stocks taking it on the chin. We jump around to yields. Higher price, lower yield, and we got the 10-year right now. We still at 4.25. We might be below that level. 4.23. Yeah, lower yield coming at you in this market. That is the pressure. Dollar 103.82, but all the pressure on the downside in this market right now, folks. And you talk about volume, you talk about price and volume. All right, look at these volume numbers on that acceleration lower. Okay, now the peak day was March 4th. We've had it trail off a bit. Okay, but on a weekly basis, how about that number, right? a weekly basis, more than 4 million shares, folks. The day we did that, you got to go all the way back to last April. The most volume we've done since you had the NASDAQ pushing 17,000, okay, almost a year ago. That is a big number, and it's a bigger number than where we were in the week prior. Now, that kicked off March, okay, but look at where we are in March. We're 10 days into the day, and we have almost 5 million shares. What are we at right now? 4.3 million shares traded, all right? And last month, which was a gangbuster month in volume, all right, and I guess, end of the month. But, yeah, you're talking about big numbers, man. We'll see where we go. But we got volatility in spades, as my dad would say. And speaking of avocados, I haven't had my breakfast yet, but I enjoy a little coffee in the morning. Not a huge breakfast fan in the get-go. But guess what, folks? In 2018, I was ahead of the curve, man. Halloween. The original avocado. Yeah, I had to find that one. I was thinking about it. October of 28, almost 7 years ago. But yeah, I was all about the avocados then. I still am, man. Avocados on the rise. Market volatility persisting, folks. Thanks for tuning in. Kicking off your Monday right here. Stay tuned. We got Basil Chapman up next. Steve Rhodes, Fast Market. Larry Pesavento, Jacob Shoup this afternoon. Have a great Monday, everybody.